Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Sergey Nazarov, the co-founder of Chainlink, the industry standard Web3 services platform that has enabled trillions of dollars in transaction volume across DeFi, insurance, gaming, NFTs, and other major industries. As the leading decentralized Oracle network, Chainlink enables developers to build feature-rich Web3 applications with seamless access to real-world data and off-chain computation across any blockchain that provides global enterprises with a universal gateway to all blockchains. It's great to see you again, Sergey. Welcome back to Trade Talks.
Thank you for having me, Jill. Great to be here.
What is the real value of blockchain and Oracle technology, and how will it impact organizations and users?
In two words, I would say that cryptographic guarantees are the foundational value our industry provides. This can be seen in various systems not necessarily fulfilling their promises. So for example, messaging systems use something called end-to-end encryption. And end-to-end encryption only became popular in messaging systems when people stopped trusting unencrypted messaging and they stopped trusting large organizations to do messaging that wasn't graphically guaranteed. This loss of trust by messaging systems is the same thing that's going to happen for all of the world's value and all of the world's digital relationships. And then they're going to need to be cryptographically guaranteed, which basically means that you can rely on mathematics to follow through for you instead of people. So right now, relationships are based on people and brands deciding to follow through on their commitments. And unfortunately, the way the global economy is going and the global macroeconomy is going, that's not going to work so well. People aren't going to be following through on all their counterparty commitments, and there's going to be issues because of that. And I think this is when cryptographically guaranteed relationships that are forced to happen in the way that they've been defined will become extremely valuable and important, because it'll be the safe haven for how everyone wants the world to work, because the relationship-based world won't fulfill people's expectations. So cryptographic guarantees are the things that are going to reinvent society after what's coming in the global markets happens.
Which parts of society will be impacted by Web3 first?
I think it's the parts of society that don't fulfill their obligations, where brands don't fulfill their promises. In the past, that's been social media, brands that don't fulfill how they store people's data. And so everyone has turned to encryption instead of just giving away their data, right? This is why messages are now encrypted on Signal, Telegram, WhatsApp, and all these systems, and why there's been over 6 billion of those types of apps getting downloaded. In the current day, I think, unfortunately, the financial system is experiencing some serious problems, both based on monetary policy and just global debt in general. So there's going to be a reimagining of how financial systems should work that don't depend just on somebody giving you their word and you hoping that they follow through. I think what's going to happen now is everyone is going to realize that there's a encrypted, guaranteed way to have these relationships in the financial industry, in the capital markets industry. And that is going to be what everyone depends on. I think it's something that's going to come to the fore again, like it did in 2008, about why is the world not more guaranteed? Why does the world not fulfill its promises as a financial system? And the difference this time is going to be that cryptographically guaranteed finance, sometimes known as DeFi, will step in and give people the stability and predictability and risk management that they need to continue to have a global financial system.
So then what will lead enterprises and banks to adopt Web3 technology?
Banks and enterprises are largely driven by their users' demands of them. And so when the users decide that they want to use DeFi, they want to use crypto tokens to have ownership of things, they want to interact with counterparties on the basis of cryptographically guaranteed relationships, those demands will be things that enterprises and banks have to meet, just like they seek to meet the demands, the other demands of their clients, just like they sought to meet their clients' demands to create mobile applications for them and create websites for them to use. So I think that the risk that people will be experiencing, the issues that people will be experiencing, the global markets, will lead enterprises and banks to want to assure their users that they are safe. And this is the way that messaging systems restored faith in themselves. They basically said, I'm going to encrypt your messages, and I'm going to guarantee that I can't see them, and I can't sell the data, and I can't share it with third parties, that you don't want to have that information, right? So this has already happened with very basic communication in the form of text message. And now it's going to happen to financial systems, once again, because those users of the financial system demand a more predictable, more cryptographically guaranteed relationship, because that is going to be one of the only relationships that has predictable safety. And that's kind of where I think all of this will really get going.
What role do decentralized Oracle networks have in creating greater adoption of Web3?
So Chainlink and decentralized Oracle networks are really Web3 services. If you look at how advanced applications in Web2 are built, such as Uber or Netflix or others, you'll see that they are a collection of what are called services, which are basically separate systems that are stringed together to make all the advanced functionality. So Netflix is composed of hundreds of separate services. Uber is composed of hundreds of separate services. These services are really what underpin this explosion in more advanced applications. And what decentralized Oracle networks do is they make these services possible for Web3 developers. And historically, when services become available in a wide variety and with a lot of quality, they can then be composed into more advanced applications. So that's really what Oracle networks do. They create a Web3 services form, where before you couldn't make DeFi because you couldn't have data, and you couldn't make fraud-proof blockchain games because you didn't have fraud-proof random numbers, or you couldn't make insurance because you didn't have weather data. Oracle networks are the services that allow Web3 applications to do more, to be more advanced. And that level of advanced functionality is what's critical for providing the world stability and more stability in this cryptographically guaranteed format. So Web3 services, such as the Oracle networks, are really the critical final building block for the explosion of application value that's needed for Web3 to make its way into the mainstream. So that's the very important role that they play, just like the appearance of services enabled Web2 applications like Uber or Netflix to come into existence. That's what Oracle networks do for Web3.
What is the most important thing regular folks such as myself should understand about blockchain technology, cryptographic guarantees, and the Web3 ecosystem?
It's a better way for them to relate to their financial life. I think right now the cryptocurrency ecosystem is still connected to speculation and to tokens and to all of these things. And I think the cryptographically guaranteed portion of blockchains and Web3 isn't clear yet to many people. But it is the very big fundamental difference between your relationship with a bank that holds your money, to which you have a password, through which they could maybe not return your money, or they could halt your trading, or they could do any number of things that you didn't predict, to a world where you have an extremely clear relationship with your assets that you own, and the trading venue that you use, and the insurance provider that you rely on. And this insurance provider and this trading venue and this asset holding system can't deviate from its promises to you. Now, this right now might not seem as necessarily valuable, except in the places where those things are not working as expected. But I think we're going to now be entering a world where many of those things won't be working as expected, where trading will be halted, where asset ownership might not be released, where insurance companies might not fulfill their obligations due to solvency questions, and then having a very direct, very mathematically guaranteed relationship with your financial assets, with your trading venue, with your insurance provider, is something that's going to be the difference between having that service and not having that service. And so I think that the average person, when they see the obligations that they expect to be fulfilled from their existing providers of asset and trading and insurance, I think they should look at Web3 as the solution to the risks and to the problems that they might experience with existing asset custody systems like banks or existing insurance systems or existing trading venues. And that's really what our industry is doing. It's creating an alternative way to solve these problems that isn't subject to the same failure modes as the rest of the financial system.
All right, very well explained. Sergey, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.